And now for our listener questions. If you want your questions answered during the show, go to our website, retireewo.com, and click on Ask a Question. Stephen, you've got our first question?
Yep. Todd from LA writes, where do you see interest rates going over the next 3 to 6 months? Great question, Todd.
3 to 6 months, it's going to be hard to project. I mean, I think the Fed's likely going to start cutting interest rates after June. You're going to see a number of cuts, probably 3 before the end of the year, but the market has already priced in some of those cuts already. So you might not see a bunch of movement in interest rates because it's been priced in already, but I would see some of a decline probably starting after 3 months. If the Fed continues on that trajectory and they start to project where rates are going to go in the future, they're going to start looking at 2025 and see if those rate declines are going to continue. Now, a lot of people have an interest in rates coming down. One of those big interests is the federal government. The cost of our debt is so expensive with where rates are at. I think if inflation stays under control, the Fed is going to start lowering interest rates. They've told us where they want to be, a target closer to about 2.5%. So I do think you'll see a steady decline in rates if inflation can stay tamed. So I'd say probably no change in the next 3 months. 3 to 6 months, probably a minor decrease in rates, not huge. And then I think that continues second half of the year into 2025.
Yeah, and Scott, I can't agree more. And I just want to echo that with maybe the 3 to 6 months on a time frame for an investment decision might be a little premature. Scott already touched on the market has had a really good, really at this point, probably 14, 16-month stretch. And that has been in anticipation of the rate cuts. So trying to time a 3 to 6 month rate cut might not be the wisest, really, because that timing should have come over a year ago at this point, really. So while, it does have a massive impact on our life, if you're looking to purchase a home, purchase a car, whatever it may be, just keep in mind that it's going to be a little hard to predict over the 3 to 6 months approaching our first rate cut already, kind of in this March, April timeframe. So just keep in mind, don't put too much weight on any one decision. On what you think Jerome Powell and the Federal Reserve will do over the next 3 to 6 months.
I think the only other thing that is relevant, Stephen, is in your bond allocation. What's the bond allocation that makes sense? But we do see where things are trending. I think that's more important about the precision about when rates are cut. Next question comes from Nancy from Long Beach. She writes, AI, where should I invest? Stephen, you want to take that?
Yeah, Nancy, great question. We already covered that for a good piece in this episode, so I'd encourage you to go back and take a listen. But to answer your question directly, where should I invest for AI? There are a lot of companies that have their stock prices have soared due to artificial intelligence. There are some different ETFs out there. If you want that precise, there are some artificial intelligence ETFs. But I think artificial intelligence is going to be a lot more applicable in places that you might not realize. For instance, there's a lot of hype around a tractor company out there and the integration that they're using with artificial intelligence in their tractors and their combines to help automate farming. So that's just a small example of some ways that you can use artificial intelligence, ways that you might not think about. Earlier in the episode, I touched on artificial intelligence. I think will be a lot like the internet, probably a little bit more rapid of a adoption mainstream than the internet was, but it's really going to just impact our lives as a whole. So just like there's not really a ton of strictly internet-based companies that have done well that are pure internet providers, there's going to be companies that use artificial intelligence for their own benefit in ways that we probably haven't even thought about, right? I mean, when you look back at the internet, some of its main impacts were social media companies, and those came around the late 2000s, probably 10, 12 years after the internet really became mainstream. So just like artificial intelligence, there's going to be, or just like the internet, I should say, artificial intelligence is going to be a part of every company in some aspect or another. So you're going to get benefit of that no matter what holding you have, generally speaking, whether that's the S&P 500 as a whole, some specific companies. Artificial intelligence is going to probably streamline the companies that you hold in one way or another for your benefit and for the company's benefit as well. Scott?
So Nancy asked AI, where should I invest? How I'd answer that, Nancy, is I think you want to be looking at individual companies that show a path to profitability from AI that's going to be swift. The companies that have been moving the highest as of late are ones that have proven and demonstrated that they can show profitability from their integration with AI. I think you have to be careful with companies that are losing money, and just know that companies are going to need a lot of capital and investment to be able to profit from the latest and greatest tools that are going to be out there from AI. Stephen makes a great point that there's going to be broad applications, and this is going to be a long cycle thing. But just like the internet, there were big winners and losers. If you bought in 2000, the best answer wasn't to buy every internet company. I think the same way in AI, it's not to own everybody with AI in their name or everyone that's talking AI. I think it would be more intentional. Look for those ones that are going to have broad, profitable appeal. That would be my best advice. And be very careful of manias. Be very careful of mania investing, stock prices that are way up for no reason. Look at companies that are way up because they've shown the profitability or fundamental outlook on where they can move the business. Our next question is from Donna in Anaheim. She writes, I'm a teacher and I have a pension I'll get when I retire. I read about something called windfall elimination provision and that it will hurt my Social Security if I have a non-covered pension. How do I know if I have a non-covered pension? Stephen?
Yeah, great question, Donna. So when you say you're a teacher, I presume you're part of CalSTRS. You are a public school teacher, not a private school teacher. But that aside, so non-covered pension is simply saying you have a pension from an employer where you did not pay Social Security taxes. So that's pretty much, by and large, just a public pension. That will be you if you're part of CalSTRS. Non-covered pension, you did not pay into Social Security. So non and not the most perfect little word play there, but NON, NOT, good way to remember that you have a non-covered pension if you did not pay into Social Security. And yes, CalSTRS does not. So I can assume that you have a non-covered pension and that when you do receive your pension in retirement, and if you do have any Social Security benefit of your own, yes, it is true that windfall elimination provision will reduce that. A couple things to keep in mind. Elimination provision cannot completely reduce your benefit, and it's a relatively complex calculation to figure out what that will be. You set up a time, we're able to help you walk through projections on what your Social Security will be, and then what that WEP elimination, that reduction will be onto your benefit. All right, our next question. Dennis from Orange. He asks, my Social Security has been increasing over the past few years. Should I be concerned about if Social Security cuts are on the horizon? Is there anything that I can do about it?
Dennis, thanks for the question. I get this question a lot. Is Social Security going to be around? Am I going to still keep getting payments? What if they make a cut in the future? You know, the question is, what can we control and what can't we control? What I would tell you is that I think it's very unlikely that there's going to be a significant cut to Social Security for people that are receiving benefits now. A couple reasons is there's a few easy fixes I think they're going to make. They're going to raise eligibility age for younger workers. That helps fix the Social Security issue pretty quickly. They could make adjustments to the inflation calculation, and they could do some means testing. So if your income is over 500 grand a year, you definitely would be in the crosshairs. If your assets are over 5 million, you'd be more in the crosshairs. So means testing is something that could impact higher net worth and higher income earners in the future. But likely, the most likely outcome is that they're going to impact younger workers with raising eligibility age. So I wouldn't be super concerned about it. If you are concerned about it, the other thing you can do is through a financial planning process, you can stress test those scenarios. What if Social Security was cut by 25%? What if it was cut by 50%? Where would we pull from and when? And part of our financial planning process is stress testing those types of scenarios. So that's something that we could help you with.
Yeah, and Scott, I just want to add something to that. I think something to keep in mind is whoever's in Oval Office in Congress, if you are in office when there was Social Security cuts, that's pretty much a political suicide. That's going to be a stain on your reputation that you probably will never be able to get off. So just natural selfishness of humans and their reputations. It's going to be very hard to pass cuts to Social Security just for their own selfishness and desire to make sure that they stay in office. At a 30 trillion deficit already, what's another couple trillion, right? So I wouldn't be too concerned about it. I think Scott hit the nail on the head that younger people that are still decades away from Social Security, they should have some concerns. But yeah, people that are already receiving it probably is not worth your stress.
And as you mentioned, Stephen, I think with the debt that we've accumulated, the government and politicians have had a very difficult time cutting anything. I think there's a lot easier things for them to cut before they cut Social Security. Democrats and Republicans have been pretty united in knowing that it would be political suicide. So there's a lot of other things that they likely could cut and other ways that they can tinker with the calculation before they overtly cut Social Security benefits. And right now, we're printing over $1 trillion more that's coming in revenue, and yet the value of the dollar has stayed strong. So they haven't been penalized because of how they're spending.
Next question. Mary from San Clemente asks, why has the market been so strong this year when there is so much to be concerned about in the world with Russia, Ukraine, the Middle East, and elections coming up later this year?
Mary, thanks for the question. I think it's important to remember the market is not the economy and the economy is not the market. And one of the things that I would say is that the international conflict that has been going on, even though the human toll can be gut-wrenching to watch and to see, from a financial aspect, we've not seen a contagion effect. We haven't seen what's gone on in Ukraine and Russia impact the global economy or even the Middle East in a significant way. Now, in the Middle East, we were concerned with the Red Sea. Is there going to be some disruption to oil prices? We haven't seen that be impacted either. Oil prices are very reasonable considering the tensions that are going on. So just like when we think about politics and elections, often there's opportunities to make money regardless of who's in power and regardless of the outcome of elections. And our biggest job is to determine, kind of sift through the noise. What are the things that impact your pocketbook and impact the bottom line as an investor? Same thing happens with international conflict. Run-of-the-mill, normal, regional conflicts that don't expand to be wider issues, those are things that often the markets can digest and deal with. The markets don't like uncertainty and unknown. And the more that something like that, Russia-Ukraine's now 2 years in, we kind of, at this point, the impact has been dealt with through the financial system. And so that's one of the reasons. And then there's been a nice steady slog higher over the past couple of years in the market. Why is the market higher? Earnings for companies have been growing. Profitability of businesses has been going higher. And that's been a big reason we've seen these markets march higher.